Hello to everybody, our dear subscribers. FutureTrend channel is again with you, and today is 20th of December 2018. Federal Reserve Bank meeting is behind us, and we could make a kind of final conclusion regarding the decision of the Federal Reserve from yesterday. And we suggest that more or less this decision was quite optimal for the current state of the market, for the current expectations, but from the point of view of future vision, probably it was a little bit mistakenly to take such kind of approach regarding the future path of interest rate increases in the United States during the period of 2019. As you know, the dot plot projection, which calls us regarding the future path of United States interest rate increases, was revised down for the 2019 from 3 increases to just 2. But the market was expecting even a possible one increase, one hike for the 2019, and as a result, as you could see, the stock market is under heavy pressure this morning, and as a result, rising risk aversion sentiment drive the Japanese yen, for example, much higher. At the moment, dollar yen is trading below the level of 112. Let's see the dollar yen chart. At the moment 111.96. We are below the level of 112, the first reliable support. Let's say the truth, probably this kind of support is not exactly at the level of 112, but probably even spreads to the level of 111.60. Anyway, in case of breaking below the level of 111.35, probably we could even test the so-called moving average. There is such kind of technical indicator like moving average 200 daily line that today located around 110.88. That's our main priority in such kind of environment we have at the moment. We suggest that the stock market will remain under increasing downside pressure, and in such kind of environment, especially such kind of currencies like Aussie yen or Kiwi yen should remain under heavy selling pressure. Sterling dollar, which is at 126.38, more or less the same from yesterday's levels. Of course, yesterday we even touched the level of 27.04 or so. Anyway, after that plunge to the level of 26.05, more or less we are in the middle of the range between 126 and 127. Today is a day of Bank of England rate decision, which is should be more or less a non-event, because the market suggests that the Bank of England will remain on hold. And today is the release of UK retail sales numbers, an important indicator of the state of the UK economy. And more or less, we should understand that now the main priority is the result of the Fed's meeting from yesterday, and the market's reaction to the last decision of the most powerful central bank in the world. Also, the sterling should remain under the pressure of Brexit negotiation, and we should understand, and so on. We should make decisions regarding what type of position to take in sterling, a short one or a long one. We should rely mostly on such kind of developments in the Brexit negotiations, or for example how the dollar will behave regarding of the current decision of the Fed. As regarding the dollar Swiss, which is also has a status of safe haven currency, we are speaking about Swiss franc. Dollar Swiss at the moment looking more or less stable and still trading around the levels of yesterday session, 99.30 at the moment. Let's see the chart of the dollar Swiss. Dollar Swiss now trading around 99.32. So we could see that no kind of a real impact on this pair from the Fed's decision, but we should wait a little bit, as we told yesterday in our updating that now the future of the United States dollar is in the arms of the market participants. How they will react to the final decision of the Fed regarding the hike and its future rate path. Let's see, let's wait, and after that make a kind of conclusion. At the moment we suggest that it's not a time to buy euro-yen or euro crosses because of rising risk aversion, especially such kind of crosses like Swiss franc crosses or Japanese yen crosses should remain under increasing selling pressure in an environment of increasing downside pressure on stock indices and increasing risk aversion sentiment. Also the same applies especially for the Aussie yen and Kiwi yen, and in such kind of environment, taking into account that okay, Aussie and Kiwi really has a good had a kind of made a good job to the downside during this night, not only because of rising United States dollar, but also because of negative economic indicators that were published during this night in the New Zealand and Australia. As you could see, Australian employment unemployment rate ticked a little bit higher from 5% expected to 5.1%, and which is more important, New Zealand gross domestic numbers came in much below expectations. And in such kind of environment, also taking into account risk aversion sentiment that's rising at the moment in the world financial markets, these types of currencies like Aussie yen or Kiwi yen should remain under increasing selling pressure. At the moment that's all. Take care, listen to us, follow our recommendations. It was your Future Trend channel. Bye bye for now.